Well, one of you asked me if I would do a video about multi-step income statements to help you, I guess, study for the test. So I'm happy to do that. Let's go back over the way we built a multi-step income statement using this Boxankle Kia dealer as an example. The idea here is called a memory palace, and the idea is that we're going to look at the income statement in the context of a month in this small auto dealer. And if you would visualize what's going on in this dealership, that should help you remember the steps of the multi-step income statement. So just kind of, well, let's start out by picturing people coming in. Well, first of all, let's look at an inventory of three cars, three Kias, and start out by picturing people coming in during the course of the month and buying these three cars. Just picture them looking at the cars and buying them um, at a total cost or a total revenue of $70,000. That is the total amount that the customers paid for these cars was $70,000, and that's the sales revenue. $70,000 sales revenue, the top line in any income statement is sales revenue. So they bought the three cars, and Boxankle Kia had to actually buy the three cars from Kia of America. So think about that. Think of the cars being delivered to Boxankle Kia, and think about how much did Boxankle Kia pay for the three cars when they went into the showroom. And we said that was cost of goods sold, and we said that was $60,000. So we subtract the cost of goods sold from the top line of $60,000, and this is what's left over after they account for what the dealer paid for the cars, and that gives us gross profit. Gross profit is sales revenue minus cost of goods sold. Well, now we've got some expenses. We've got the expenses, for example, of advertising, and this is the gerbils, but I won't click on this to show you the gerbils. You've seen the ad, you saw the ad in class, if not elsewhere. So they have to pay for expenses like advertising. They have to pay for expenses. They have to pay for the salesperson, and here's the salesperson, and for utilities. So just think about that. Think about advertising and the salesperson and utilities. And these are not expenses that are attached. These are not expenses that are attached to any of these three specific cars. These are expenses that are attached to operating the entire dealership. In order to operate the dealership, we've got to have salespeople, we've got to have electricity. Certainly helps to have advertising if we're going to sell any cars. So these are general operating expenses. They're sometimes known as general, administrative, and sales expenses, but we call these operating expenses. They're expenses that are involved in operating the business, but they're not the cost of specific products that are sold. They're more general expenses involved in operating the business, and when we subtract those from gross income, we come out with operating income. All right. Well, a business may have expenses that don't have to do with their business, with their operations, that don't have to do with selling cars, for example. Boxankle Kia may have a bank loan that they have to pay interest on. They may have to pay real estate taxes on their dealership. These have nothing to do with selling cars. They have nothing to do with the actual operations of the business, but they have to be paid. And we call these non-operating expenses. And in this case, they're $1,000 for the month. And subtracting those out comes to pre-tax income of $3,000. Finally, in a corporation, Uncle Sam, income taxes have to be paid. So we're going to take our pre-tax income and we're going to subtract the corporate income taxes which are paid, in this case $800, and we're finally going to come out to the bottom line. The bottom line is net income, and it's $2,200. So that's it. I mean, we've kind of traced the sale of these three cars from purchase by the dealership, $60,000 in cost of goods sold. The customers buying them, the top line, for $70,000, giving us gross profit, subtracting out operating expenses to give us operating income, subtracting non-operating expenses to give us pre-tax income. Finally, we subtract income tax to get net income. And now all we really have to do is give it a title, and there's our three-line title. And we have ourselves an income statement. We don't particularly need these little drawings on the income statement. Here we have the income statement right here. So that's what you need to know. Here's the general formula that you need to learn. These are the steps in the income statement. As you're learning these, remember too, please, that you will need to understand earnings per share. So if, for example, Boxankle Kia consisted of, were owned by owners holding 1,000 shares, then this $2,200 net income would be spread over 1,000 shares divided by 1,000 shares to give us $2.20 a share. Finally, remember that you need to be able to calculate and understand the profit margin, where we ask, well, what percentage of this $70,000 gross sales revenue do we get to keep in net income? So we divide $2,200 over $70,000 to give us 0.031, which is 3.1% of our profit margin. So know how to know the steps in the multi-step income statement, know how to calculate earnings per share and what it means, and know how to calculate the profit margin. And I'm sure you guys will do very well when I ask you questions relating to this on the next test. All right, thank you very much.